Volatility isn't just a key theme in equities, it's one in commodities as well. But when you drill down, if you'll pardon the pun, you also see a lot more is going on. More nuanced action, if you will. Different resources markets are being impacted differently by the same thing, the trade and tariff saga. In fact, my next guest is seeing some very interesting price discrepancies and notable price action beneath the surface. So let's get right to it. His name is Darrell Fletcher. He's Managing Director of Commodities at Bannockburn Capital Markets, and he's another brand new guest here on the Money Show MoneyMasters Podcast. Darrell, thank you so much for taking some time out to talk. Obviously, there's a lot going on, not just in the commodity space, but the markets overall. So I guess I want to start big picture, kind of 30,000 feet up. I mean, what kind of year has this been for commodities investors versus maybe equities investors? It seems to me you've got kind of two big groups, the growth commodities that are getting buffeted by tariffs, and then sort of the insurance contra dollar type commodities that are benefiting, right?
Yeah, it's been an interesting year. Commodities is always interesting. I've done it a long time, so I enjoy it. It never gets boring. And I tend to follow the commodities specifically as opposed to the equities. But actually following like the energy space, the metal space. Obviously the tariffs have had a big impact. Volatility was, really high. It seems like it's settled down a little bit the past week or two. Kind of retrenched, stabilized, crude oil stabilized. The front's up a little bit this week, but the forward curve is really stabilized. So kind of in a retrenching right now, but overall, for the year, base metals have been marginally higher. Crude's been off. It's a lot of what I thought would happen when I kind of looked at where I thought things would move this year in January. It's pretty much played out. Gold and silver have been great, which I thought would happen with all the volatility and unknowns, and it's pretty much played out. But I think we're in a little bit more stable space here right now, at least for the next 90 days, maybe. So we shall see. But it's been interesting as always.
Yeah, we shall see. Those words, never before have those words been so important as they are, I think,
Yes.
in this environment. And
Yeah.
let's talk about that sort of Trump 2.0 environment. I mean, what impact do you think it is having now? What impact do you think kind of the policies that are being discussed will have as we get into, the back half of the year?
Well, I think the uncertainty hasn't gone away for sure. I mean, 90 days doesn't fix anything in terms of companies' ability to um, capital plan. Planning's really been tough this year, obviously. CapEx, flows of commodities have really changed. And I follow HRC steel, copper, the differentials in copper between United States COMEX and LME. That's been really fascinating. And yeah, so it's quieting down a little bit, but we're still in a really uncertain environment. 90 days doesn't really fix anything. And so I think the rest of the year, we'll have to see where it goes and if they try to get some footing and get some more assurances into the market. I know the stock market seems to think that's the case in the past few days here, but we'll have to see what happens. The commodities, they've been, I don't know, crude's rallied this week, not necessarily, I mean, certainly because of the UK, US, and the China talks over the weekend helped. But you haven't seen the biggest move as you would think, and you certainly didn't see it in the metal space the past few days. It's been higher, but it's been muted. So
Yeah. Let's talk a little bit about underlying demand trends. I mean,
mhm.
if the tariff stuff settles down, and obviously, again, that's a huge if, what do you see as the environment in terms of the supply demand picture? I guess starting with energy, first of all. I mean, obviously, OPEC's been in the news a lot as well.
Yeah, OPEC's moved up. That's been a bearish impact on crude oil. The past few weeks, OPEC's really essentially accelerated all of those moves they were going to make through 26 in production and they're bringing them in. They're bringing them in like every month, it seems like now. I think their next meeting is June 1st. I have to double check. So that has been a push on the downside. Global demand's been, weak, but a lot of that was anticipated weakness too, in terms of how the market has priced it, because of the trade complications. So that's why we've seen some move up this week, some clearing on that. But it's kind of balanced. I think U.S. producers, a really interesting piece was out again today on Bloomberg, but that $55 to $60 level is really
Yeah.
important. And we've seen 55 hit off like on the nose twice since the past couple of months. And it's stood, I mean, 60's actually stood pretty well. But if you really think of U.S. production break evens, depending on the basin, 55 to 60 is it. I mean, you get below 55, there's going to be issues. So, there's offsetting things. So I think that the producers don't have a lot of incentive to overproduce right now. Where Baker rig counts have started to fall off. You're seeing that. I'm following that a little bit. And it's had um a little bit of a flow into natural gas too, because of the associated natural gas that's produced, especially in the Permian. So that's what natural gas is kind of has bumped up here and been pretty well bid. I mean, a little
Yeah.
more than I thought in the front. And then the calendar 16 has held really well in the 440 range now. So it's
Glad you brought
interesting.
up. Yeah, I'm glad you brought up natural gas. I was going to ask about that.
Mhm.
Obviously, the U.S. being this sort of big LNG player now, and that's changed the dynamics in that market. How do you see things kind of unfolding there?
Yeah, the LNG is certainly bullish, and the expansion is going to keep coming. Everything seems to be flowing pretty well. We have a huge advantage in price, obviously. So that's part of why the gas prices have held up nicely out the forward curve. I think we fell back off in like Cal 27, 28. That's been a big positive. Again, associated gas from crude producers, that can be falling off. I know production last week is running like 103, 104 a day. So they're not being excessive in production for sure.
Hmm.
Demand's been decent. So we've had a pretty, I would call it a pretty guarded market because inventory was really behind, January, February, we were so cold. And then March, we kind of caught back up. So inventory levels in the US at least are right at the 5-year average or a little bit above now. So we've kind of caught up, but it's still really a guarded market because of the potential for LNG to really kick up. The amount of power that keeps growing here, and the amount of power that's switched from coal to natural gas has a big impact. So I call it a really guarded market going into the summer. We're in the shoulder season right now.
Yeah.
But as we start to get into summer, if we get any heat at all, that's why I think these prices are kind of guarded higher here right now. I think the front's a little bit overdone right now, but we shall see.
Yep. Let's go back to precious metals in a little more detail. I mean, we've gotten to the point where gold was rallying or falling $100 plus a day. Obviously, it's a smaller percentage move the higher the price goes. But I'm curious your thoughts there. I mean, do you think we've seen a longer lasting top there? Do you think, there's something to this ongoing central bank bid? What are your thoughts on that market?
Yeah, I like gold and silver. I had that view to start the year. I still like it. It's the one commodity that really has been highly correlated to the US dollar, especially in the past few weeks. But because everything else is kind of just on its own, gold has really followed like it normally would. With a weaker dollar, it's been stronger. We've taken some of the top off from 3,500, obviously, with a little more clarity in the market for now, at least. But I still like it. I mean, I think as a diversification for sure for central bank buying, and I just don't see great reasons to sell. So I'm still, positive on it. But I think we've definitely taken up the top here for at least in the short term.
Got it. Okay. And shifting, you touched briefly on base metals earlier. I mean, what's kind of your outlook there? What are maybe one or two of the key drivers for that part of the market?
Yeah, I was, fairly confident on base metals this year. They've performed marginal, a little bit higher. Copper's had some nice rallies. Copper volatility's been high. The differentials in copper between LME, Shanghai, United States have been all over the place. I think LME to the US hit some levels that were the gaps, the differential hit all-time highs. So I'm still really positive on copper fundamentally. It's taking some time to play out. If you look out the forward curve, I think it's still in contango. It's pretty impressive. I mean, if the front of a curve can move up to 480, 475, and you still have contango going out the curve, that tells you that the market is fundamentally pretty solid. So I still like that. We've seen some nice gains in aluminum this week. Um, Base metals don't follow nearly as, inversely as gold does to the dollar, but
Sure.
kind of the second one down in terms of how closely it would be inverted on how it follows. But we need clarity. We need some clarity. We need to see some strong growth in China for the base metals to really, really do well.
Got it. Darrell, is a commodity story that maybe either I haven't asked about or that you find particularly interesting out there that might be outside of the ones everybody talks about, oil, gold, and so on?
Yeah, I think the one is the differentials we've seen between the basis plays, especially in the metal space. Like I said, HRC, Steel here has had a nice rally this year domestically. Hot rolled coil Midwest premium versus like an iron ore, it's been really stagnant. And then the copper differential between London and COMEX US with a lot, it didn't pan out that there has not been a tariff put on copper specifically, but that fear really ran a lot of the COMEX copper prices higher this year. And then the other one would be Midwest Premium Aluminum. That has ran, it was up 80% this year. And that's, again, specifically a domestic premium to aluminum.
Yeah. And that does bring up the question I feel like I had to ask is, we've negotiated away, at least temporarily, some of these tariffs, but I think from what I understand, steel, aluminum, all that stuff is still on, correct? And if that stays the case, how do you see that impacting commodities markets and investors, again, 12, 18 months out?
Yeah, it's just a rerouting of flows. It's not like gonna, it's just gonna, if that stays in place, we'll continue to see these differentials really move more than they ever have, which is what we've seen this year in some of those metals. Um, so there's gonna be rerouting, and like I said, the 90-day. So I was thinking about a lot yesterday. 90 days reprieve without like real good clarity, which we don't have. It's a step in the right direction. Doesn't really give you a lot of confidence around, okay, I can unleash my CapEx, I can start to plan, I can reroute or change what I was going to do with commodity flows. So it's a step in the right direction, certainly, but it's not, it doesn't have enough clarity yet, in my opinion. And I think
And
that's why we saw a kind of a muted move versus what the market might have expected coming into Sunday morning, Monday morning, Sunday night, Monday morning, um, when this was announced. And copper, it was up, but it wasn't as much as you would have seen like energy up.
got it. And what kinds of things are you hearing or reading, out of execs in the industry? I mean, is there anything interesting that stands out to you about what the CEOs, the producers are saying here, or the CEOs of the users of a lot of these commodities are saying here?
Yeah, it's hard to plan. Like I've already alluded to, it's really hard in terms of corporate hedgers, to make big decisions about hedging, input costs, things like that. It's kind of a guarded market. I think the other interesting story is on the oil and gas production to see what happens as we go through this year. Again, that 55, 60 is a really important level for U.S. shale production. And if OPEC continues to accelerate, how that all pans out.
Geopolitical concerns out there that really weigh on you or that are a big influence? I mean, obviously, again, the U.S. being such a bigger energy producer, it seems like what happens in the Middle East matters less than it used to. But I'm curious about your thoughts there.
Yeah, that's always a wild card. I mean, it seems like it gets played a lot, so it's hard to really keep track of it all. But geopolitically, it's always going to affect oil. Seems like the more than anything else, and so we'll just have to see how things go the rest of the year. There's some pretty big meetings today over in the Middle East for Trump, so we'll see how that all plays out.
Got it. Well, Darrell, you're going to be joining us for our Las Vegas symposium event.
Yeah,
Excited to see you for the first time in person out there in July. And ostensibly, we always have to plan these, give these things names well in advance, but it was going to be where commodities stand, where they're going. Can you just briefly summarize sort of, what somebody is going to get out of that presentation, what they're going to be able to pick up from you while you're there?
Yeah, in January I did an overview, and I think I sent it to you guys earlier, of kind of the different classes we talked about: energy metals, base metals, precious metals. I looked at like 6 or 7 different classes, kind of had my thoughts, my views, and then my conviction around those. And so far it's played out pretty well. And I think what I'm going to do is to have an update to that and the kind of a conviction on it also going forward. 6 months isn't a long time, especially in the commodity space. So, but kind of update those views, look at the pros and cons to each of those asset classes, what's happened so far this year, clearly talk about tariffs, and kind of put an update on those and any big changes I may have to those.
Got it. Perfect. Well, listen, Darrell, thank you so much for your time, taking some time out to chat here. Viewers, if you're watching this and you want to learn more from Darrell, he is going to be joining us for the first time at the Money Show Masters Symposium. It's in Las Vegas, July 15th to 17th, at an all-new venue for 2025, Caesars Palace. Check out the details in the description below. Click the link if you want to register. And Darrell, I look forward to seeing you out there.
Great. Thanks, Mike. Take care.
You too.